Right, guys, so this is the final part of my levels, and this is really going to be a quick one because this is simply the 200 and the 20 EMA, okay? And the one I use for levels is the 200, and the 20 I really just use for trend confirmation. So let's just get cracking with this. And I'm going to use a little green line here along my 200. So this purple dotted line is the 200 exponential moving average, or 200 EMA. The green one is the 20 EMA. Okay, and you can see here on the daily, there is the 200 EMA. And I think let's just, for the sake of sanity, just do that as well. So those green lines indicate the daily 200 EMA. And I'm going to drill right down to the 15 now. And let's go to the first one. Right, so there was the first daily 200 EMA. Buyers, 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 buyers. Sellers tried with the buyers. And you can see how we just ranged on this 200 moving average. Okay. We then did break to the downside. And we hit it. And you can immediately see, I mean, we're on the 15 minutes here. We hit it, and we had 2 bars of selling. But then the buyers broke through, and we continued on our journey. We've come back to test the level. And that's how price works. It breaks a level, then it comes back to test the breakout. So it's come back to test it, and the buyer stepped in and took it away. Okay, so now that is important on all levels. And you can see here, and guys, it's not exact. You can see it's not an exact science. There's obviously another level somewhere along the line, so you need to bring my other elements together, and then you'll figure it all out and get a nice rosy picture, I hope. That's the 15. So now what I've done is I've added the 4 hour, and look what happens in the 4 hour. You can see how price is using this as an area where the buyers are stepping in. Same thing here. Okay, so the 200 EMA is a critical element. So if any of the higher time frames are close to the 200 EMA, bet your bottom dollar there's going to be some action around that level without fail. Okay, and as you drill down into the lower time frames, it is still respected. You can see how it's respected there, how it's respected there, how it's respected there. And even if I go down to the 1 minute, you will see how 200 EMA is well respected on pretty much every single time frame. Okay, so that is the one area. The one part of this video is the 200 EMA. Whenever you have the 200 EMA on a higher time frame, just mark it on your charts. If price is anywhere near that 200 EMA, for example, right now, for Monday, I will have that marked. Okay, simple, straightforward. Then that is a level. It's one of my levels that I need to pay attention to. Now, if we start looking at the 20, so and I said the 20 gives me an indication of the trend. So, and I'll explain it to you now. So you'll see how buyers and sellers do interact with the 20, but not with as much vigor as with the 200. So a successful defense of the 200 normally means a big move, whereas with the 20, it's more of a case of this is where the buyer, if you're in a trend, if you're in a downtrend, this is where the sellers are looking to get involved. And you can see the 20 running down there, but you'll see it a lot clearer on a lower time frame. Okay. And you can see how we broke through and we stay below the 20. And get there, the sellers step in again to push it down again, because whenever we are underneath the 20, the trend is to the downside. When we're above the 20, the trend is to the upside. Okay, and these are micro trends. It's not well, it does work on the long-term trends as well, but obviously you'd need to look at something like the daily for that. And you see this is an uptrend. We're above the 20 moving average, and we're staying above it. On the very lower time frames, like the 15, you find a lot of interaction with the 20. So this is an uptrend, and you can see it's going to come back. There's going to be buyers at the 20, and they push it up one more time. Okay, here you can see how, again, hits 20, and the last second push down happens. So the 20 I really just use in relation, where are we in relation to it? And it can be a level if you are scalping, or if you are on, for example, the 5 minute. You can see in the bigger trend is up, mini level is the 20 moving average. Here, 20 moving average. Okay, so it's not that important to me, but it does indicate the direction and where we're going. The big one for me is the 200 EMA. And that's that. It's as simple as that, guys. So that's the final video. Now what you need to do is take all three and label those three levels on your chart when you're setting it up for your daily trade setups. And don't go crazy with it. Take the ones where there is support numbers. So for example, if we've got the daily 200 over here. If I have an ichimoku level, say there, and I have another level, say there, so then I know that this zone is what I need to look out for. And this is the area I want to get long. And converse is true on the top. So you'll see that you'll have an area where there will be 2 or 3 levels. So that is a very strong area. That's the area I want to get short. And there's nothing else to it. That is how I dumb down levels. I hope this one helps. And that's it. Video number 3. If you like it, give us a thumbs up. If you haven't subscribed, don't forget to subscribe. And I'll catch you guys later.